From J.D. Power's NADA Used Car Guide offices, this is your used commercial truck market update with senior analyst Chris Visser.
Wholesale depreciation outpaced retail in 2016, with sleeper tractors losing about 30% of their value at auction from January to December, compared to 23% through retail channels. Trucks sold at auction in 2016 brought about 30% less money than last year, while trucks sold retail brought an estimated 13% less. In the auction lanes, depreciation generally accelerated in the second half of 2016. From January to December, sleeper tractors lost about 2.5% of their value each month, which beats our early estimate of 3 to 5% per month. This figure is also better than the nearly 5% average monthly loss in the second half of 2015, but of course selling prices are roughly 30% lower today than they were then. Our retail data shows average sleeper pricing in 2016 12.3% lower than 2015, a fairly positive result given the much more substantial depreciation in the auction market over the same period. 3 to 5-year-old sleepers lost about $15,000 or 23% of their retail value over the course of 2016, which translates to just under 2% per month. This figure is 0.7% higher than 2015. In terms of dollar value, the average 3 to 5-year-old sleeper brought 12.3% less money in 2016. This difference is notably smaller than the drastic 30% year-over-year change in auction pricing for these same trucks. Dealers were reluctant to lower asking prices to catch up with changing market conditions until the second quarter of this year, which limited sales volume but likely propped up pricing for the trucks that did sell. Pricing has now dropped to market-appropriate levels, but sales volume is still off moderately compared to the pre-market shift period of early 2015. Current conditions should remain in place over the long term, thanks to an ongoing substantial returning supply of trucks. Retail volume was more stable in 2016 than 2015. Retail buyers are still somewhat scarce, but the level of comfort with market conditions continues to improve. Looking ahead, based on deliveries of new trucks over the past 5 years, we expect an increase in returning supply of trucks in 2017. It's likely that OEMs are already stockpiling some of these trucks, keeping them out of the marketplace until conditions potentially change. General economic conditions should continue to gradually improve in the first 2 quarters of 2017. After that, the drastic changes the new administration plans in the trade and manufacturing sectors should start to create a different landscape. In general, an increase in import tariffs looks very likely, and a shift towards domestic manufacturing should be a longer-term trend. Both of these factors will make raw materials, finished goods, and the cost of production more expensive, limiting expansion. On the other hand, increased domestic manufacturing will improve demand for deliveries of materials, which benefits the trucking industry. We do not forecast a notable acceleration in the rate of economic growth in the first 2 quarters of the year. After that, we'll see how the new landscape will shift the manufacturing sector. We'll do our best to provide data that will help the industry through this interesting ride. That's all for this month. Be sure to read our commercial truck blog and Guidelines monthly market update, both available at www.nada.com/B2B. See you next month.